Welcome to Candle Theory, where the charts speak and the gurus stay silent. Today's market review isn't about hindsight hype, it's about clarity, structure, and showing how the model told us before the move even happened. Let's break down the profile, the reaction, and the truth behind the candles. Let's get in this market review by showing you a trade that made me over $400. We also did 140 ticks on the move. This was for New York AM on ES. So let's start this review by cleaning our chart and then moving over to the daily time frame. This is where we're going to get our higher time frame analysis. As they say, move from a higher time frame to a lower time frame to get a better bias. And we're going to try and put that into practice. What is current price doing right now? Is it still continuing in its bullish trajectory, or is it currently finding a rejection somewhere? We have this wick gap to the left. That price is currently finding a rejection. And what is going to be the next area of interest for price once it confirms it has a rejection from this wick gap? I know at least half of you told me there's going to be this one. But we're trading in today. So what is today going to do? So we have to put this in perspective that this candle does not exist. If we're rejecting here, where is the next area of interest? It's going to be this low right here. Price is failing to go above this wick gap. Where is the closest wick that it can draw to? Price also found rejection at the low of that wick gap and went above and closed. So this area is going to have a lot of volume in it once we get to it. Okay, so let's keep that in mind. Let's close out this replay again. Go to the 4-hour. Where is our premium and discount currently? We're in the middle of the range. Going to be the wick gap at the top. And then it's going to be this wick up at the bottom. You start seeing how it's cleaning up for us. It's starting to show us where price is currently going to want to draw towards. Let's go to the 1-hour. We still have this same sized wick gap on the 1-hour. So this area is becoming a really good key for me. I'm starting to see why price wants to go there. Same at the top. Go to the 15-minute. Now our profiles and our MCR ranges are going to show. Okay. All the previous videos are going to start making sense. Let's draw out our premium of all of these MCR ranges, which are going to be these 15-minute wick gaps at the top. This is where price is going to find rejection or continue price. Let's see what price wants to do once we get to MCR. New York AM MCR has started. Now I want us to look at what has happened. And I know everyone's going to be, yo, with candle theory, the market has already moved 100 ticks. It's not going to move another 100 ticks. Okay. So what we're trying to do is trying to trade outside of an area where we're going to get trapped, where it's not going to continue in our intended direction. It's going to try and fake us out. We're not trying to get in that. We're trying to get out of that. That's gross. That's ew. Okay. So once this zone is finished, this is from 9:30 till 10:02. Okay. That's going to include 9:30 manipulation, that first 30 minutes. And then sometimes you can get a distribution from that first 30 minutes by the next 30 minutes, which is going to be until 10. But the issue is if there's news at 10, this entire hour is just going to be Ping pong, consolidation, weird price action, in and out, fake outs. So we're trying to get out of that and only look at price action reacting from whatever has happened from that manipulation. Let's look at our biases. Let's see what we can see to get into our trade right now. The 1800 of the day is above. The DCR for the week that was created earlier in the day is above. We have a 4 hour, a daily, a 1 hour, a 15 minute. We have all of these wick gaps at the bottom accumulating, telling us price does not want to stay here right now. Now let's talk about the candle theory, especially the candle science and candle closures. I'm going to go into that right now. So we know the bias is bullish. That's where price really wants to go. How can we get in a trade once this manipulation is finished? Okay. Let's look at what price does. So at the start of this manipulation, we see price still ranging a bit, but I'm going to wait until we go above and create some sort of candle count. Okay. So we created a candle count right here with a candle closing higher above price right there. Let's see where it was rejecting from. It was rejecting from this wick gap. You understand what we're trying to say? You don't trade fair value gaps, guys. We're looking at the wicks. Okay. So price needs to close above these candles, these wicks, for us to go up. So let's wait and see if that happens. There we do. So now I know price does not want to continue lower because, yet again, the same concept is right here, but we closed below this candle right here. Why didn't we go lower? Because price doesn't want to do that right now. We know that. So let's wait for price to do the same thing that we did right here, and then we get in for a trade. How about that? And then we target these edges. We target our premium edges where price wants to draw towards, our DCR, our 1800, these 15-minute wick gaps at the previous profiles. This one from manipulation. We have the top of MCR that we can find support on top once we close above. We have a lot of things that we can use once price does go up. So let's look for that. So we have price failing to close above this MCR. Now, 80%, probably 90% of everyone trying to trade MCR right now is going to tell me this is a retirement setup. We failed to close above when we had a candle count, meaning that we closed below this candle that created the high. Yes, we did. But the intention is not bearish right now. We're not trying to go bearish. So let's see if we can get a candle count to go up. That is going to be our entry. We can see price going up right now. It hasn't created a candle count yet. Okay. It's finding support at that wick gap. We need to close above this candle. And we're going to have to, the best case scenario is closing above this candle, because then if we do close above here, price is not finding rejection at that previous wick gap. It's still going above and then rejecting off of this accumulation right here to go higher. Okay. So we do have a candle count within 3 candles from the 0 candle. So it's 0, 1, 2. So we had a confirmation. The momentum on the lower time frame wants to go bullish right now. Remember, candle counting is going to give you an entry before your fair value gap because it's based on closures of a previous candle. We're not waiting for a reaction. We're not waiting for a 3 candle pattern to create a gap. Let's get in for this trade. Let's look at 18 ticks. And then we take it to the 1800 line. Let's look at our price closes and then where we find rejection. We can also add standard deviation to the original New York AM MCR. We have the 0.5 above, we have the 1 and the 1.5. Okay, these are all areas of retracement once we close above the MCR. So we're going to need to have price closing above each and every single one of these and then reacting back to a wick gap that was created at that standard deviation. Going to react from the wick gap and then go up. Here we have price doing another candle count, closing above this candle that failed to close higher than the manipulation. Now that new wick gap is going to become the support for my stop loss. It's gonna help aid that price does not go lower. We have the wick at the top of manipulation. We have the 0.5 standard deviation. And then we have this new wick gap at the bottom. We also have this candle at the bottom right here because we haven't closed below it. We have this accumulation right now supporting this stop loss. So we went break even right here. Here we can see we created a wick gap at standard deviation 1. So we're going to highlight that and see how price reacts once we close above it. So price needs to close below this wick gap for us to have a little bit of an oh fuck situation to know if we want to stay in this trade or not. Because if we start failing to hold on top of these wick gaps, we're actually just going to go lower. We're going to do the same thing that I explained here, where we're going to find reaction between the wick gaps. And if we start breaking them, all we're doing is just traveling to the next one. And we don't really want to do that. Here we can see price doing another candle count to go higher. I had a re-entry on my account. This was where that second buy is coming from. And then I just took it to, I believe it was the DCR, or it was just between the two. I think we just had a massive push and I was like, cool, I'm out. I think that was enough for the day. Here we're going to have price ranging around the 1.5. Like I said, everything between 0.5 and 1.5 is going to be an area of retracement. But there shouldn't be a worry anymore because we're already closed above the 1.5. We haven't touched the 1 yet. So we haven't found rejection anywhere from standard deviation besides confirm on the standard deviation. Here we can see price reacting off of the 1 standard deviation, which is also supported by this wick gap. But yeah, we created another wick gap at the top here, reacting off of 1. So let's see what happens once we close above it. Here we see price ranging between those wick gaps. And this was the last push. Now the same logic applies when you're looking for a reaction from an area of interest. Now remember when I was explaining price is going to find support at these wick gaps to continue higher. And then once it fails, it's going to ping pong and then just domino effect down. Okay. So what is price doing right now? It's finding support, well, a really good rejection off of the top of 1800 range. And then it's also finding a good rejection off of the top of coil range. We then close below the top of London range. The price right now does not seem happy to be above any of these ranges. Okay. What is the 0 candle for this move right now? It's going to be this original candle that touched the high. of 1800. Now, if we're trading 18 ticks, this was a really good trade if you wanted to get into it. But with the replay, we missed it. So something that you could do is wait for price to touch back into a zero candle. Okay. You're going to get reactions from your zero candles. See, this was the original zero candle at the bottom. It's really, really tiny. The price comes back to it. Yeah. So if we had our entry right here, maybe a tick below, 18 ticks, and then just ran to, let's say, the top of MCR. If you are tired of chasing fair value gaps and hoping for retracements, this is your sign to study structure. The MCR doesn't just explain price, it predicts it. Join our free Discord and over 400 members that trade the model itself. Subscribe if you're ready to learn, and remember, every single candle tells a story if you know where to look.